Over the past few weeks, the stock market has been ripping to the high heavens. In fact, the most recent trading week, we put in a perfect week. I'm talking 5 for 5, green, 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 and green. And it's not just the stock market, even the crypto market is really getting a nice pump. Unfortunately, and this is what I'm majorly going to be covering in this video, some of the news that came out late Friday afternoon, almost evening after the market closed, it means that we might be going into a little bit of a breather on the equity side. So in this video, I'll be breaking down what played out over last week. I'll be breaking down the major news over the weekend. And really, I want to set you up what to pay attention to for this upcoming week, with a special emphasis on why I don't think that the bull party is necessarily over, but it does seem as if some things are right now becoming pretty political and the equity market might be going into a bit of a pause, if you will. Obviously, if you enjoy these type of market breakdowns, don't forget to like, subscribe, all that good stuff. And with that being said, let's rock. When the world's largest casino officially closed on Friday, and thus the week, here was the headline. S&P 500 posts fifth winning day, notches a 5% weekly gain as the US-China trade tensions ease, and man, oh man, was it glorious to behold. As you can see, 5 green days in a row. Ever since this low, the market has rebounded 23%, and that also means from the all-time high, we're now only down a mere 3%. Obviously, let's take a little bit of a pause and pour one out for all those doomsday predictors who were telling us the market's never going to come back. It's going to be the most horrific crash we've ever seen, and they basically just missed out on this entire rip. And I should be clear here, it's obviously not just the equities market. Crypto obviously looking really good right now. I'll be coming back to that in a second, but some of our favorites, Tesla, nice pop. Nvidia, nice pop. Palantir, nice pop to a new all-time high. Same thing with Netflix, nice pop to a new all-time high. There's been a plentiful amount of opportunity, and I hope you've been getting yours. So let's really start this off with why. Why have things recently, but more so specifically over the past week, been so green? Well, it started off about a week ago now when we learned of trade tensions simmering down. Surprise US-China trade deal gives global economy reprieve. Tariff reductions are bigger than expected, and Bessent says neither side wants to decouple. Good news, like I said, tensions really calming down, and if anything, it's paving the way for future trade deals, and we're expecting to hear some of those very, very soon. On top of that, good inflation news. Annual inflation rate hit 2.3% in April, less than expected and lowest since 2021. Now, those are both good, but it wasn't completely perfect. U.S. consumer sentiment slumps, households brace for inflation surge. So yes, it is very good, but it's not like a perfect, we're bowling 300 out of 300 type of a situation. It is very good, favoring the bulls, but we're not necessarily out of the woods yet. And unfortunately, right when the stock market closed on Friday, we realized we might be a bit more lost than we previously anticipated, and we don't really have our map. Right when the market closed, the SPY was right around 594, and you can see we took a nosedive of 1% all the way down to 588, and obviously this was news driven, and it was because of a US credit downgrade. Investors wait another Monday jolt after Moody's downgrades the US. Moody's has been a holdout in keeping US sovereign debt at the highest credit rating possible and brings the 116-year-old agency into line with its rivals. So that's the first thing I want to explain of how it was a holdout. There's 3 major rating agencies. Yes, you have Moody's, you have Fitch, and you have S&P Global. Previously, all the way back in August, the other 2 already downgraded the US. Right here, August 1st, Fitch downgrades the US long-term rating to AA+ from AAA, and then also a similar time period with S&P Global. United States of America long-term rating lowered to AA+ on political risk and rising debt burden, outlook negative. So Moody's, just to be clear, yes, they did just downgrade us, but they did it way after their fellow competitors. And more specifically, here was the reasoning. Moody's ratings cut the United States' sovereign credit rating down 1 notch to AA1 from AAA, the highest possible, citing the growing burden of financing the federal government's budget deficit and the rising cost of rolling over existing debt amid high interest rates. And more specifically, from their exact statement, the This one-notch downgrade on our 21-notch rating scale reflects the increase over more than a decade in government debt and interest payment ratios to levels that are significantly higher than similarly rated sovereigns. So to be very clear here, the reason that they downgraded us was allegedly because of the financing of our debt, and I'm already seeing news go haywire, blaming this on Trump, blaming this on Trump. Obviously, when you're talking about the debt of a government and something that's been happening over decades, it can't be one person's problem. If anything, I would say it's the US government's issue and not the guy currently leading the government, as saying in their statement itself. And to absolutely no one's surprise, the administration is already hitting back. Scott Bessent calls Moody's a lagging indicator of the US credit downgrade. Treasury Secretary Scott Bessent said in an interview that Moody's ratings were a lagging indicator after the group downgraded the US's credit rating by a notch from the highest level. I think that Moody's is a lagging indicator. I think that's what everyone thinks of credit agencies. If you've learned anything about credit agencies, they're very politicized. Well, I shouldn't say very politicized. They're politicized, and yes, they are lagging. The Treasury Secretary asserted that the downgrade was related to the Biden administration's spending policies, which that administration had touted as investments in priorities, including combating climate change and increasing healthcare coverage. So here's my question for all of you. As of right now, this downgrade, who do you think is more to blame? Do you think it's Biden or Trump? Let me know in a comment below. I would love to know your reasoning. And just to wrap this up, the Treasury Secretary Bessent concluded his thoughts by saying, it's the Biden administration and the spending that we have seen over the past 4 years. So taking a step back, this isn't going to be so good for the market come Monday. The reason is most people don't dive into the news. They read the headlines. They realize that the US is being downgraded, not really knowing what it means or even why they did it. And really, it's just negative news, negative sentiment. The bots and people are going to react to it. And that's going to prompt probably a little bit of selling and by definition, less bullishness. So that's one thing to consider. The other thing to consider is where we are in the month. This past Friday was an OPEX Friday, the major monthly expiration for so many different options contracts. And unfortunately, we saw a bunch of call-related open interest, call-related gamma expire, burn off the table, as in a lot of the bullishness from the options market and the underlying support we had, it just disappeared because they all expired. And unfortunately, we're not going to find out if those players choose to roll their positions or if they're just taking their money and run. But regardless, we can see all this excitement, and this is just the options flow from Friday, very bullish. Unfortunately, it is now gone. So on top of this negative news for Moody's, we have to consider the current cycle that the options market is in. Positive note, though, is it is different for individual equities. So on the screen now, once again, we're looking at options flow. This is for the Mag 7. As a quick reminder, the Mag 7 is Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Gives you an idea of what's going on in the tech sector. I find it's pretty representative of a lot of our most popular favorite, obviously, individual equities. What's interesting here is, yes, there was quite a few bets for this Friday, but in the coming Fridays, we're still seeing strong call bets. We're still seeing strong bullish bets. So here's my prediction. In the next coming week or two, I think the overall market's going to calm down, and we're going to see a lot more opportunity in individual equities, which really leads me to my next question for all of you. What is your favorite individual equity that you're going to be watching for the upcoming week? And I should probably add this in, but on top of equities, don't forget, crypto is looking real good. Bitcoin's all-time high is 109,000. As I'm filming this, we're trading at 105. It is very, very possible that by the next time I film a weekly update video, we're talking about old BTC, old digital gold, old bitty Bitcoin at a new all-time high. Now, with respect to the upcoming week, in terms of major macroeconomic events, there's really not that much scheduled. I should call this out. Trump says he will call Putin and Zelensky and NATO members on Monday to talk a ceasefire and trade. So that could break in a positive way, it could break in a negative way, something to pay attention to kick off the trading week. With respect to seasonality, the middle of May is historically a choppy period. It's not really favored by the bulls or the bears. And if you want to know the days specifically, remember I give this out for free. It's always been free, always will be free. macquarie.locals.com. It's in the description of the video. Highly recommend you sign up. This newsletter comes to your email inbox every single Sunday. I break down the previous week, the earnings for the upcoming week, all the major macroeconomic events, and then I give you the seasonality for each individual day. So for those of you who want to play it a little bit more specifically with those 0 DTEs, you have a bearish day on Monday, a bullish day on Tuesday, more of a bearish day on Wednesday, then kind of a neutral / bullish day on Thursday, and then to conclude the week, kind of a choppy neutral day. That is the going trend for May in a general sense. It's not commonly dominated by the bulls or the bears. Historically, that's why we have this saying, sell in May and go away. And what they don't tell you is you probably want to come back pretty soon because you don't want to miss the bullish summer session. Anyway, I digress. That's what I have for you right now. That's what happened last week. The bulls were in control. Then over the weekend, we got some unfortunate news that I think people are going to react to with not really understanding what it is. And now we're at the point where I think we're going to pivot from the overall market to where opportunity can be found in individual equities. And obviously, crypto is looking real good right now. That's what I have for you. If you have any questions, comments, or concerns, let me know in a comment below. Obviously, I appreciate you making it to this point in the video. Hope you're having a great weekend. I appreciate all the vibes.